Morning. Good morning. I assume everybody can see the screen. We're good to go. Steve, you got a good screen on your end?
I do.
Okay, nice. Looks like a couple people are still joining. Just give it a minute or two more and we'll get going. Set up the Q&A box here. And all right. So good morning, everybody. Thank you for joining us for this webinar. My name is David Diaz. I'm a managing partner over here at Walker Reed Strategies. And I got Steve Nanos, one of our VPs, with us as well. He's going to be making sure I don't screw anything up here throughout the presentation as we get going. So, we're very excited to be on this call. It's been a while since we've had anything new around the energy tax incentive world. I mean, at least anything new worth doing a webinar over. There's been plenty of new things and fun things in the industry here over the last couple months. But as far as worthy of doing some educational information around and getting some new changes and information out to the public. This newest thing in quite some time. So a little bit about us. Walker Reed, we're a specialty energy tax incentive provider. We've been doing this for quite some time. These energy tax incentives came on the market back in 2006. We got started right around 2009 with our firm, and Steve joined us a couple years later, and it's been a good relationship for everybody. We're very excited about the past and definitely about the future. We have tons of experience when it comes to all these energy tax incentives. We work specifically around two. So, and this webinar will be kind of based and geared towards the new changes coming as part of the Inflation Reduction Act. At the same time, there's going to be folks on this webinar who may be not familiar with the original Section 179D for the commercial building tax deductions, as well as the residential. I call it the residential little brother, but it's been a pretty big incentive for the 45L tax credit as well. So I am going to give a small summary here at the beginning. We're going to go over 179D had the most substantial changes and the ones that I can really have some talking points around. 45L had some big changes too, but there's still a lot of uncertainty as to how the guidance is going to go out and play out. So again, if you're not familiar with this 179D, when I refer to Section 179D, we're talking about the commercial building tax deduction, specifically to commercial buildings in the government sector, private sector, now the nonprofits. And when we talk about 45L, we're talking about the residential tax incentive for new homes, multifamily, and whatnot. So, and again, I'm David Diaz with Walker Reed. Steve's on here as well. Steve's one of our VPs, and so let's get started. A little bit of background for those of you who are not very familiar with 179D. 179D is a energy tax incentive for energy efficient commercial building. So that reference here to the EECBTD is for energy efficient commercial building tax deduction. Currently, that benefit, just so everybody understands where we have currently are and we're currently operating, the current standards will remain in place for any buildings placed in service through tax year 2022. So anything that was placed in service in this tax year is going to remain under this current guidelines. So we'll talk about the 179D that has two different elements to it. One being the private sector element, which is an accelerated depreciation benefit that's available for new construction or major remodel or any energy improvements that have been made to commercial buildings. Currently, that incentive's up to $1.88 per square foot with some, there was an inflation adjustment that came out earlier this year that allowed that to go up. And on the government side as well, it stays at $1.88 a square foot. So you have the ability to allocate this deduction from government-owned buildings to designers of energy-efficient commercial buildings. And then we have the 45L tax credit. 45L tax credit currently is $2,000 per unit, and that's a $2,000 incentive per every dwelling unit. So you're talking apartment buildings, assisted living facilities that meet the definition of a dwelling unit, and residential new homes. And there's manufactured homes as well. It's not really a big market, so I'm not going to dive too deep into that. As far as who can benefit from these incentives, when we're looking at the 179D on the private sector, you got commercial building owners that are really the driving factor there. It comes to them in the form of accelerated depreciation. So if any of you are familiar with cost segregation, I like to say that 179D is like the cherry on top of your cost segregation. You know, you got your cost segregation study. There's plenty of great firms. Lots of them are on this call right now, that do that type of work. They'll do the cost segregation study for you. If you still have the tax appetite, still have the need for additional accelerated depreciation, you can take a year one additional benefit of up to $1.88 per square foot in accelerated depreciation. As far as who can benefit from the government building owners, government buildings that have had major energy improvements performed to them, those we're looking at designers of commercial buildings. So government-owned buildings is the key there. And I got a slide later on in the presentation where I dig deep into that, because there isn't any changes necessarily around the Inflation Reduction Act with the designers, but it's been a contested area when it comes to 179D. It's an area that has a little bit of abuse in the past by some firms and some folks that have been taking it, and maybe necessarily shouldn't have been. The IRS has been keen on auditing the designers of the energy efficient commercial building property for government-owned buildings. So I'll get into that, and I'll discuss that a little later, a little deeper. And then as far as a residential tax credit, that one goes out to developers or of residential homes or apartments who have bases at the time of construction. So that's the key there. You have to have bases at the time that you develop that property, and it's year it's placed in service is basically when it's taken use, occupancy, first time initially leased. So that's
or sold.
Key there. Sold. Thanks, Steve. As far as project types, you know, when we're looking at 179D, we're looking at new construction or retrofit, any major retrofit or renovation, new construction, any energy improvements, energy project, ESCO work, performance work, contracting work, anything that's going to significantly reduce the energy usage on the lighting, building envelope, HVAC are the main categories, the main drivers around the 179D. The historic 179D piece before the Inflation Reduction Act adjustments come into play, you know, kind of accounts for partial deductions for the three categories. For the time being, you know, we'll handle that for you. Let us take a look at it. We'll let you know where you land. So, and then as far as 45L goes, it's new construction or major renovation. Now, when we talk about major renovation, we're really talking about a major renovation. You're almost going all the way down to your shell, and coming back up for those to end up qualifying. So it's not that easy for those to qualify from if you're renovating. New construction is the bar is not as hard to qualify as it used to be on the 45L. So there's a lot of benefit there, and there's going to be some major changes to 45L. I would recommend that, you know, any developers or any apartment builders on this call would look at exploring, if you haven't done this already and you're not already taking advantage of the incentive, I would almost recommend now is the time to do it and go after those deductions, those credits, I'm sorry. And, you know, if you have to carry some forward, carry it forward, because the bar is going to raise pretty substantially when it comes to the 45L under the Inflation Reduction Act. It's going to be a different world. Sorry. And then as far as deadline, 179D is technically a permanent incentive. They've made some changes here under the Inflation Reduction Act for 10 years, but it's still permanent in nature. So we have some long-term vision and looking forward on it. It can be you can, for once, and 179D has never been one that we've been able to really look at on a long-term basis, but we're at a point now in the current situation where you can start making some business decisions around 179D, counting on 179D being there, where it really hasn't been. With the 45L, it expired at the end of 2021. So anything placed in service was part of it as 2021. Now it's been extended through 2032 moving forward as part of the Inflation Reduction Act. So qualification opportunity, a 179D, you know, most new projects, it's really really have a good shot at qualifying. I mean, greater than 90% chance that the new building or major renovation is going to have some level of benefit of 179D. Steve, I don't know if you want to talk about that a little bit. It's really something that we run into quite a bit. If you want to jump in there and kind of discuss that area a little bit, I'd be happy to let you do that.
Sure. As it says right below that 90% chance, it mentions ASHRAE 90.1, 2007. So as you can imagine, it's fairly reasonable to look for improvements from 2007, lighting being one of the biggest ones since LEDs was not prevalent or available back then. And when we get to now, it's very rare to find a project that is an LED. Even some projects that are laid out LED with non-LEDs, when they actually go ahead and construct it, often are installing LEDs anyway. And that's an area where it may not qualify on the plans for the full benefit, but when we get out there and audit as part of qualifying the facility, we find that that's typically the case. One of the nice things about 179D also for companies that are adding an addition or expansion is we're able to combine and look at the overall facility. And very often we're able to double or more the potential benefit for a major improvement by adding new space and spending capital dollars. So we find that it's very rare when we actually get out there and audit any missing information. It's unfortunately not unusual, especially from private builders to have missing information, but we're able to qualify that after our field audit and inspection, which is required by the IRS. So that's why it's got a high chance of qualifying there. Similarly, in the 45 residential home tax credit, we're looking at 2006 standards for projects that are, all of these for projects that are installed in 2022 and earlier. So it's just something to consider that go after it. There are some that don't qualify. I'll give you an example. You'll see this more in a few projects for residential, 45L up in the northern, mid to northern part of the United States, where a developer decided to save some money on the HVAC side and put cooling with electric strip heating. That'll basically knock you out for a good part of the country. If the cooling is not heat pump helps and often helps, then qualifies. Down south, Florida, where our office is, other areas, Southern Texas, other areas, heating is a very small issue, and electric strip heating is normal. So you very rarely have an issue with that. South, there, the efficiencies on the cooling side are then what you look at mostly for qualifying. But it all goes into a big pile. We look at the envelope for 45L and the heating cooling. And hopefully, and in most cases, we do see a qualification. Thank you, David.
Absolutely. No, thanks, Steve. Yeah, and then so I had a quick question jump in here. If anybody has questions as we go through the presentation, feel free to type them in. I'm trying to monitor them and at the same time. So one of the questions was, do the incentives vary by state? As several of the states have energy codes that are a lot more stringent than ASHRAE 90.1 2007. And the answer there is no, they don't vary by state, which is one of the benefits and one of the reasons that 179D in its current state can be so attractive and so lucrative to so many building owners. And so that's part of it. And we'll get into the IRA and some of the ASHRAE standards and some of the changes coming up as part of the presentation as well. So that's coming in a second here too. So all right, so as far as what has to be done in order to get the 179D and get the 45L, just as a baseline requirement, you need an independent third-party professional engineer to perform the modeling and site visits. as well as a HERS rater to perform the 45L modeling site visit. There's other, that's the key component. So that's really the role of our firm. It's what we do. It's what we specialize in. We help, some of the top CPA firms in the country, some top cost segregation groups in the country, and a lot of major clients to take advantage of this incentive. And that's our role. So we're that independent third-party certifier that verifies that all of these requirements end up getting met under the standard. So if you have any questions, you don't have to figure out that piece on your own. That's what we're here for. If you have a project coming up, if you have past projects you aren't sure, don't try to go to your engineer. Don't try to go to your non-specialized professional. Not that saying that they don't know what they're doing, but at the same time, there's lots of specific provisions for 179D and 45L that are not just part of ASHRAE 90.1 that a lot of the professionals who don't work in this program every day aren't used to certifying these buildings for that purpose, right? They may do things for code compliance. They may do things for the purpose of simply just an energy analysis, but they're not necessarily inside of the 179D in the incentive world, and they don't know all the nuances and niches of things that can really maximize these incentives. So you may hear from somebody, hey, this doesn't qualify, but they may be certifying it or modeling it a way that's incorrect, that isn't conventional for the purposes of 179D. It's very conventional to the real world, we call it, but the energy tax incentive world is not the real world. It's a completely different cloud we live on here, dealing with the IRS and the engineering world. So there are some additional benefits that could be gotten from just conventional engineering terms. I don't know. I'm a Game of Thrones fan. I don't know if we have any Game of Thrones fans here. I got excited about the new premiere of House of Dragon the other day, so I wanted to throw Eddard Stark into my presentation because realistically, we do have to somewhat brace ourselves. We do have changes coming. So there are major changes that are coming for 179D and for 45L. Some of them are more exciting. Some of them, it's more White Walker-ish, if you know the reference. And we may be a little scared of what they're going to do to the marketplace, what they're going to do to business for not just our firm, but for some of these developers who've been really taking advantage of these incentives and using them to supplement their bottom line. So,
David?
Yep.
Just a comment there. It is a whole new ballgame, as David will get into. For those affected negatively as opposed to positively by it, and there will be some of those, it's a bipartisan supported benefit, both. So if there's something that severely hampers it, and we're still working through what works and what doesn't, we'll go into some of those areas. If there's something, it's not unusual for then our government to realize things and come up with modifications. So
Yep.
There's an intent to use this to reduce emissions, reduce energy use. If something turns out to be a major area, especially once we get guidance from the IRS, then it's something that certainly will be supporting a discussion and potential changes, which quite likely would be retroactive if they come into place. So we'll go through it. And again, until we get guidance, there's a lot of areas, but David, thank you. And David will get into that.
Yeah. No, Steve, and Steve brings up a great point. Reality is, when 179D and the EPAC was first enacted in 2006, it was end of 2006, end of 2005, beginning of 2006. It took 2 years for the IRS to actually issue the guidance that allowed the work to actually get started and be able to do the incentive, because all these bills are very, they have the intent component. What's the intent here? The intent is to reduce energy consumption, to motivate designers to build more efficiently and design more efficiently, to motivate the developers to meet certain standards. But as the wheels of government turn very, very, very slowly, we're going to be dependent on these in true honesty, the 179D guidance and the 45L guidance was never, ever promulgated by the secretary. So it was never issued. We've been working off of guidance issued by the IRS, and that's become the norm. And acceptable practice, and it's been true tested through audits. I mean, we've been through, 50, 60 audits ourselves where, we've been able to kind of figure out what the IRS wants from this. And we've adjusted our business models and our practices and procedures to what would be the best practices at this point, and what we considered are the best practices that can provide the most benefit, and at the same time, protect our clients from an audit point of view. But we're going to see that these new changes, there's still some gray. There's tons of gray right now until the guidance comes out. So, it's exciting what's coming, but at the same time, we're going to have to wait on some cases, and we may still even be operating under the old standards longer than expected until the guidance does actually come out. So, all right, so let's jump into the exciting stuff, why everybody actually showed up here for the webinar. So we got some of the key relevant changes, and this is going to be for energy efficient commercial buildings placed in service after 1/1/2023. And again, everything that we talk about today, we're assuming that the guidance, and we're having to make some assumptions, right? Some of it is fact, and it's a matter of fact, and it's clear in the bill. Some of it we're going to have to make some assumptions on how things are going to operate. So some of the easy ones, we're going to see an increase from $1.88 to $5 per square foot. So that's exciting to know that that's coming. On the flip side of that, we're going to have some caveats along with it, right? One of the caveats being the 25% reduction is going to be the new starting point, which is great. 179D, to get the max 179D at $1.88, you were previously at 50% reduction, but you were at a 50% reduction against the ASHRAE 90.1, currently 2007 standard, and before that, the 2001 standard. Now we're at a starting point of ASHRAE 90.1 and whatever standard was in place 4 years prior to the date in which the building was placed into service. In this case, in 2023, that standard is going to end up being ASHRAE 2016. There's some big jumps, and I got a comparison here coming up. There's some big jumps between ASHRAE 2007 and 2016, specifically in the lighting category. And I'll get into that in some little finite detail. And I have another slide that'll help everybody kind of understand that one. So, but either way, it's exciting. One of the other major changes, and I refer to it here in this chart, is that the prevailing wage requirement is going to be in effect. Prevailing wage and apprenticeship requirement. That's one of those where we have to wait and see what the guidance says. What does the IRS come out with? I mean, there's some existing prevailing wage references in the new bill that references some existing standards, some existing programs, but we don't know yet. Are we going to have to, what's going to be the documentation requirement for this, and how we're going to have to substantiate that the improvements being made were being made with paying the prevailing wage rates. So is it simply a matter of an attestation, or is there going to have to be another study, another level of in-depthness that we're going to have to provide along with the engineering certifications that we provide already? So that's going to be one of the main factors here. And meeting or not meeting the prevailing wage requirement essentially adjusts this scale pretty drastically. So if you are meeting the prevailing wage and apprenticeship requirement under 179D, so a 25% reduction, which is the starting point, will yield you $250 a square foot in 179D tax deduction benefit. Now, for each additional point or percentage point that is achieved beyond that 25% against ASHRAE 2016, will be an additional 10 cents per square foot with a cap of $5 per square foot. So, out the gate, your $1.88 went from worst case scenario. If you're meeting the minimum requirement, your $1.88 is going to $250 a square foot. So you're already in the positive with the prevailing rates being quick there. And now you have the opportunity to get up to $5 a foot, but it's going to come from those additional energy savings. So the carrot's really being dangled by by Congress here to motivate folks to build more efficiently. On the same time, never has it been more important for, a shameless plug here, but for your provider to be an engineering firm and to really have the capabilities to know what they're doing when they're modeling these buildings, to be able to maximize the incentives, right? So, you know, this is the point where that detail and that additional expertise of having an engineering-based firm working with your firm or your company is going to be critical, because, you know, if you have a mediocre engineering firm working on it, or somebody who really doesn't know what the hell they're doing, you're going to end up with smaller deductions in the long run. So it's a really important part of it. It's you know, there's lots of lawyers and some CPAs out there who are in this world, and have hired engineers. You know, we're kind of the opposite of that. We learned the accounting side, and we've learned the law side of this, but at our core, we're an engineering firm. So we're going to be able to really help you maximize these incentives. Flip side of that, if you're not getting the prevailing wage, if you're not meeting the prevailing wage requirement, you're going to end up at a 50 cent per square foot benefit. And then it's a 2 cent per square foot kicker for each additional percentage point, up to $1 a square foot. So, I mean, that's still attractive. And Steve, you want to jump in on something?
Yeah, a few points. You mentioned we're an engineering firm. There are a lot of engineering firms, or some, that may have said, oh, you know what, we'll add this on to our construction engineering, our MEP engineering, et cetera. This is all we do. So when we get into every small aspect of taking it from a borderline qualification or just under to bringing it over the line, there are a lot of additional steps we go through and a lot of little details in the engineering that can be used. So that's where having that experience and focus has helped us over the years. In regards to the standard in place prior, we've actually had something written that way since it was changed for 2021. But it was never in place because it needs to be affirmed by the Secretary of Treasury after discussion with the Secretary of Energy, and affirm what standard will apply. So it could be 2016 when they actually get together and agree, if and when that happens, and it hasn't yet, even for the prior standards that they had set. Yeah. It could be that they say, hey, it's going to be 2013. It just can't be sooner, closer to the date than 4 years. So for right now, as David mentioned, we're still under 2007, and that may be changed coming up, but it could very well not change for a while. The other area of prevailing wage and apprentice, government projects for federal and many states, but not all, require prevailing wage and apprenticeship. So there are, on the public side, government side, there are some areas where that will be a non-issue. But there's certainly states that don't require it for their projects, and towns that, you know, in that state that may not need to meet that. So private side is probably more affected by that. But again, guidance, and if it is a major issue and the program is not resulting in the target benefits that the government's looking at, we'll be part of a group looking to have that discussion with them and see what revisions can be made to make this program as effective as they want it to be.
Yeah, absolutely. Absolutely. Thanks, Steve. All right, so let's jump into some of the others. So that's a little bit of a summary of where the benefits are going and how we're going to get there. So that's going to be a great opportunity. Jumping in on the next slide here. So a couple different areas that are also changing, a couple additional benefits that could potentially really make a huge impact for the industry. One is tax exempt building owners. So nonprofits, tribal governments are now going to have the ability to allocate the deduction to the designers of the energy 179D energy commercial buildings. So that being said, a little caveat there. So everything today, right, we're on here because there's hype and we have to talk about these things. At the same time, you know, my gut is we shouldn't be talking about any of this until we have actual guidance. But you know, the hype has forced us to be on this webinar today because it's necessary. You know, at the same time, we feel that the rules are going to be similar to the allocation of government-owned buildings, and I don't see why it doesn't make logical sense or an intent sense from an intent point of view for the changes coming for the allocation to be any different than it would be when you allocate from a government building over to a nonprofit. But at the same time, we still need to wait for guidance to come out for the IRS to at least issue a bulletin or something to point us in the right direction as to how that's going to have to be done. For the time being, we can assume that it's going to be very similar to the government allocation process, where you get an allocation letter, it gets signed by a qualified representative of that entity, and it gets allocated to that designer. But we're gonna have to wait and see. We're gonna make sure. That's, I got into that a little bit. Expectations are for the rules to mirror the existing standards. There's going to be a new qualifying methodology for retrofits. So retrofits are going to have the opportunity to qualify under essentially two methodologies. You're going to have the standard modeled methodology, where it's based on the design of the project being placed in service. And now there's also going to be a analysis using actual energy use intensity. So what was done has to be modeled or looked at, analyzed, and then a year later we need to come back and analyze whether or not those requirements were achieved or met. Again, this is another one that's we could do a whole webinar just on this topic, but until the standards come out, until we get the guidance, until we get the bulletins, if we know are they going to use the existing energy DOE energy use intensities program? Are they going to vary from it? Are there going to be special rules specific for 179D? That's a very common thing. It's very common for the IRS IRS to come out and say, hey, use this program, but less this plus that, and all these different quirks about it that are specific to the 179D. So until this is a thing and we have actual bulletin and actual guidance and something that we can at least point to and feel good about from an audit perspective, that program is going to be on the back burner, and we're going to have to wait and see. I mean, I'm sure for some, you leave it up to the capital markets and the folks in the world. I'm sure there'll be some people out there, trying to operate under some existing program, but from the IRS's perspective, our firm wouldn't feel comfortable doing something until we actually knew what the plan was there. So, big one, really big one. This one's really, really exciting, is that historically you haven't been able to certify 179D under the existing building. You aren't able to certify it more than once in its life. So building gets retrofitted. Let's say they had, in this case, we have many cases where we had buildings that had, T8 retrofits back in 2010. Same client comes in, we got them $1.80. Call it in 2011, we got them $1.80 a square foot. Now, 4 or 5 years later, they went in, relamped the entire place, got new LEDs, did some controls work. They have another jump. They spent capital again. They really improved the energy efficiency of that building, and that building owner isn't able to take that deduction again because they already claimed it once, even though they had another capital outlay. So that's an area that we're really excited about. For the private sector, it's going to be every 3 years. So assuming that new capital was spent, right? The capital's the buy-in. It's always the buy-in. You have to spend money to get money from the IRS, and especially in this accelerated depreciation incentive, you have to have taxable basis to go against. So in 3 years, if you have new taxable bases, there was a new energy project that was placed in service, that building can now be recertified on the private sector. And for government-owned buildings, 4 years. I mean, I have great clients, ESCO clients, energy efficiency clients, who year after year, I mean, they're on, we're working on this in this school district phase 10. There's these projects that are phased out and they're making massive energy improvement year after year, spending millions and millions of dollars. Now this gives them an opportunity to kind of maximize these incentives on a regular basis. The other one is, I put it in here. It's a cute comment. It's really not going to move the needle for anyone. Real estate investment trusts, and now they have the ability to take the deduction in year 1 versus waiting over 5 years. Honestly, that one's likely not going to move the needle enough for any real estate investment trust to really go and maximize this incentive. It's a nice headline, but it's really not going to be much there. So, Steve, you got something? I'm going to kind of go through some questions if you want to chit chat on any of these topics for a second, while and then we'll jump into some of these questions. Sure. Before we we get
Yeah, I don't
into.
have much to add, David. That was excellent.
I'm uh,
What you might find on some of the buildings, obviously a building that was new 3 years ago, 4 years ago,
yeah,
really is unlikely unless something was very wrong
yeah,
to put more capital into energy efficiency.
yeah,
But
yeah,
the buildings that are retrofitted, certainly both for new ones, but also looking back, there are projects out there that achieved less than the full $1.80 or $1.88 now, that achieved 60 cents because they didn't have more capital spent, or they achieved $1.20 for two of the categories. Those buildings still had room under the older program, which will apply for old buildings that are out there that are not to 2023 on. So if you know of projects that you've done, certainly for less than the full $1.80, certainly it's worth opening up again and looking to see if there's more under the old program. And those benefits can be brought forward from 2006 on by a Form 3115 change of accounting, which is a nice thing for private owners
yeah.
of buildings with 179D. So it's just something to look at there, and may bring. It's so important when we all look at fires, right? Oh, hey, I have a project. It's cost seg, or a client asked me about this, and they just put this updated this one building, or they built a new building. It's
Yep.
really important to ask them about their other buildings if it's a newer client. And you don't have that information, or even looking at your own files over the years and seeing what other buildings they did that you may not have done 179D for. It's a deep well of potential benefits when we look beyond the building in front of us to all of their buildings. So just something to keep in mind. Thanks,
Yeah.
David.
Thanks, Steve. All right, I'm going to jump into some of the questions just while they're fresh on folks' mind, and before we get to the back end of the other side of the slide. I'll try to move a little quicker. I know we're kind of running out of time. There's so much to talk about. It's really exciting. So got one question, says, will the lighting designers who previously claimed the partial deduction on government-owned buildings have the ability to split the deduction that's available still, or does it all go to one firm now? Under the current IRA, there hasn't been any changes to the way the allocation is being done for the government-owned buildings. So yeah, that there's no reason for that to change. The deduction should still be able to be split as they were in the current law. So that'll remain the same. They'll still be able to share it amongst designers. So the way the current law splits for the government agencies, the government building owner has the right to allocate it amongst multiple designers that they feel that they are designers. Key thing is here, they still have to be a designer. So I'll get into that. That's my hot topic. If you haven't figured it out yet, I field about 8 or 10 calls a week about, am I a designer? And it's because there's so much junk in the marketplace and so many lies out there about who's really a designer and isn't a designer. Another question.
Really quick on that, David. The
Yep.
vice versa is also true. We've been saying for years that the government entity can allocate the full benefit to one of the area designers. In addition to them choosing to split it, they also can choose to, let's say, give it all to the lighting provider, even if there was mechanical roofing. We've been saying that for years and years. After our review of the tax law in 2018, the IRS verified that specifically with a memorandum confirming our position. So keep that in mind as well.
Yeah, absolutely. As far as another question, says, do we have a sense when we'll know if the prevailing wage requirements are going to come out? I mean, it's your guess is as good as mine. Sometimes my gut, right, and this is just a gut thing, and just being in this industry for quite a while now and seeing what happens, my gut is that it'll be next 6 to 10 months or so that we'll see some sort of guidance come out. You know, this is a big piece of legislation. It's already a big moving beast that there's plenty of certifications being done for 179D. So the IRS might jump on it a little quicker to provide that bulletin or that guidance as to how that's going to happen for the prevailing wage. But in the meantime, we're just going to have to wait. I mean, it could take 2 years. They did get $100 and something billion. Maybe they'll hire some folks and do something a little quicker, but who knows? Another question is, I understand that deductions are only available for projects who install lighting building envelope or HVAC measures that reduce the energy cost of the building. Will the revisions include other measures to focus on energy cost reduction, such as retro commissioning, utility procurement, battery technology, offset demand charges, solar? Great question. Thank you for that. We don't know yet. You know, the new standard is going to be based on a percentage reduction against ASHRAE. I would tell you, if things remain as the current standards lie, you know, it's going to essentially, it backs out those things, right? The NREL guidelines back out a lot of those specific items you're talking about, specifically solar. Solar got backed out in 2016-ish, 17, got backed out of the guidance, and there's a little bit of conflict there whether solar can be used, because tax law essentially says you can account for these things, and then it gets backed out of the guidance that has to be used when we model. But so the question is, let's see what happens on when these bulletins come out and these guidance. My thought process is, if they maintain things as they are and status quo remains for whatever their reason or intent is, no, those things won't be included. But, you know, I don't know, they may surprise us. I would hope so. By switching to a percentage based, not a category based requirement, I think there could be the opportunity for that to be open. So maybe that was a little peek into Pandora's box when it comes to that answer and that question. So all right, I'll jump into some of these other questions here a little later. And we'll keep going on the presentation. I got some more questions. If I don't get to you live, I'll get to you on privately here. So a little bit on 179D changes. I'm going to kind of blow through this a little bit. So 2016 standard, which is what we expect to be coming up here for 2023 projects placed in service. This table just gives you lighting was easy comparison. It's an easy one for everybody to understand. But if you're taking a look at the lighting difference between ASHRAE 2007 and 2016, you're essentially looking at, in some cases, 50% change, some cases is 3% change between one standard and the other. You know, government-owned schools and whatnot, you're looking at 33%. On average, it's about a 35% increase between one lighting power density and the other. So it's going to be a bit of a, you know, the bar is going to be moved up higher, right? So yes, it's nice they dropped the bar 20 to 25%, but now they also kicked the lighting requirement up 30% or so, you know, 33, 34, 35, 20% in some cases. So there are some that aren't affected as much. They had a big jump. There was a big jump between ASHRAE 2001 and 2007. And with the LED technology becoming predominant, there was an even bigger jump between 2007 and 2016. So, you know, we see tons of 60, 70, 80% reduction currently in a lot of the projects we do. So my gut is, you know, we're going to eat away at a percentage of that. And when we model it and put it all together into the building components, it's not going to be terrible, but there is going to be, their projects are going to have to start getting a little bit more energy efficient to get there and to be able to hit those targets. But we don't expect it to be a drastic change. At least not from the whole building perspective, looking at the entire systems. When we look at the HVAC components against the ASHRAE standard, I didn't do a slide on it because it's like a very tricky web of information that it's hard to digest. So I didn't do a slide on it. I figured I'd just talk about it a little bit. You know, it's not that bad, right? And on some of the common technologies, when we're looking at the HVAC jump between 2007 and 2016, you know, the standards do go up, you know, but you're 4, 6, 7%, 10%, you know, it's not 8%. It's not crazy. And it's not crazy with the type of technologies we're seeing in buildings already getting placed into service. So it shouldn't be crazy. We should still see plenty of benefit out there. You know, are we all going to get the $5 a square foot? We don't know yet. We got to start seeing how these projects come up. We got to start seeing how the market adjusts. And again, the trend is to make everything more energy efficient. And the world's is going that way naturally. The capital markets, the markets themselves are taking projects in that direction. It's just a matter of us being able to model it properly and seeing where these projects start to land as they start to come in. So jump into this designer. I'm going to leave this here. I can rant on this for days. I should do another webinar about it. I may. So it's critical. You know, one of the big changes, something to keep in mind, there's architects, engineers, there's lighting companies, electricians, HVAC guys on this call. I mean, there's quite a bit of you on here. So, and even the CPAs and fixed asset folks that are on this call, you need to really take an understanding that when we're getting these deductions allocated for the purpose of these government-owned buildings, the IRS now has, you know, they got 45 billion thrown at them for tax enforcement. That as part of this IRA bill, the 45 billion is going to, you know, low-hanging fruit on 179D is designers who aren't technically designers taking advantage of this deduction. It's the IRS caught wind of it. They're on it. There's plenty. There was 2014, 13, 12. There's a lot of abuse and a lot of, not call it abuse. We'll call it, there was gray. The IRS hadn't done a great job of clarifying what that looked like. And the marketplaces took advantage of it. They saw the gray and they said, hey, we're going to take advantage of the gray. And we're going to start allocating this to, you know, folks who aren't necessarily doing conventional design work. So it's important. You know, the most conventional ones who should be looking at the 179D being allocated to them, you're looking at architects, engineers, design build contractors, and the energy service companies who are legitimately designing the work going into these government-owned buildings. It's every IDR we see is, you know, we see very, very, very little of them on the private sector. The private sector is not really getting audited, but the government sector, when you submit an amended return, you know, your odds go up on getting audited. We've seen them a lot on current year filings of the audits happening, and the audits all point to this fact. The IDR and the audit technique guidelines that came out recently, everything's looking at these. Are you a designer? And it's an easy thing for the IRS to take a hold of. So I'll leave that on there. If somebody has more specific questions on it, I can jump on it. I can talk about that topic for 2 weeks. So let's talk about 45L and, you know, any of the residential folks who've been sitting here very patiently waiting on this call. I apologize that we didn't jump on this a little sooner. So thank you for muscling through all the commercial building side of the incentive. So current 45L, and this is going to be another one of those topics that has a big, we have to wait and see. You know, we have to wait and see what the guidance comes out with, but we'll talk about it a little bit, what the changes are coming from. Current program is been, as part of this Inflation Reduction Act, the current program as it stands with the current standards has been renewed for projects placed in service in 2022. That's a great one, simply because, you know, it had died at the end of 2021. There was the uncertainty around what we can do here. The new standard that's coming up bumps the credit up to $2,500 for new homes and multifamily. And multifamily projects will have to meet the prevailing wage requirement. Home builders do not have to meet the prevailing wage requirement. That's the way we're reading the changes to the law. That might have been a typo, might have been a mistake. I could see where they wrote it that way for a reason. It makes sense from an intent perspective, but at the same time, you know, I think it can it could be somewhat beneficial there if you are meeting the prevailing wage requirement. Hopefully they leave the single family homes out, but we'll see. Credits going up to $2,500, and then $5,000 if you're zero energy ready. I'm sorry, which are the two DOE programs that this is being modeled after. That being said, I would love to get into this topic extremely in depth, but we really have to wait and see if we are going to simply use the existing Energy Star program as is, because the DOE has an Energy Star program to rate homes. It exists already. The program includes the developer and the builder being an Energy Star rated builder. You know, there's a lot of different components. There's pre-inspections, there's during inspections, there's post inspections, there's a ongoing requirement to be able to qualify as an Energy Star home. it's very possible, and we've seen this before, for the IRS to go and say, hey, I want you to do this 3 or 4 or 5 different components within these Energy Star guidelines, and we're going to back out these other requirements because they're not in line with the intent of the tax law, or the tax, the bill. So we're going to have to wait and see what comes out of it. Same thing with the zero energy ready homes. It's zero energy ready. Sounds stringent, but it's like a version of Energy Star with some additional components to the home that allow you to easily add solar, add standby power, and other things to the components. So that's an area where I don't want to venture to speculate, because I don't want to give anybody the wrong information yet. I don't want folks making decisions based on information that isn't there yet. And like we mentioned before, we could be waiting quite some time for that guidance to come out and really affect. They may very quickly just point to the existing Energy Star program, and that's what it is. And if it is, it's going to take a bunch of builders who are currently taking advantage of this incentive out of the marketplace. In reality, I kind of alluded to it at the beginning of the call. My recommendation is, hey, 2022, certify everything you can, close as many things you can, lease as many units as you can, get all these doors shut, and get your incentive. If you want, and 45L is a part of your tax strategy, now is the moment to essentially take advantage of that and claim those deductions or credits, and bank some of those credits. You don't need them. It might be an investment to take advantage of them, pay for them, even if you don't need them, carry them forward, because unless you're willing to step over to the dark side, this is the White Walker conversation, and get on your dragon and start doing Energy Star and really jumping into the more energy efficient side of the marketplace, you may not benefit from these incentives in the future. So that's my recommendation. It's my 2 cents on it. For builders who are in the apartment space, the multifamily space, if you're not meeting prevailing wage, the incentive drops from 2,000, where it is currently, all the way to 500. So you're looking at a pretty sizable. I mean, it's honestly, it's going to almost be not enough of a benefit for you to take advantage of it based on kind of current marketplace. Assuming they don't make some adjustments and make it simpler, or prescriptive, or some other changes, if they stick with the current program, it's going to be very, very tough for that to be attractive for anybody. And again, it would be 1,000 if you're not in prevailing wage under the zero energy homes, zero energy ready homes. Steve, you got something on 45L?
Really quick, there's been some confusion in 45L or between that and 179D regarding placed in service. In 179D, placed in service is for a retrofit functional use. So you install a new chiller or new roof, or when was it available for use by the building? For new construction, you typically see anywhere from temporary CO to final CO if there are issues that affect actually using the property. For 45L, you could have a building built, have your CO, everything clear, and if you do not lease or rent units in that building, in a tax year, there's no benefit. The actual benefit comes when the individual qualifying units, each one individually, is leased or sold for the first time ever. So a little different. So the building's ready, that's great. When you actually initially, first time ever, lease or sell that unit, that's when the tax year of the credit takes place. New homes, it's not only individual, separate, detached homes, townhomes qualify, and also I believe duplexes. So just something to keep in mind.
Yeah, thanks, Steve. Going to jump into some questions here. Got a bunch. So one question is the 179D essentially just accelerated depreciation? It's not in addition to accelerated depreciation. I assume you're meaning, no. So yeah, 179D is a year 1 accelerated depreciation. So it changes your 39-year property or your 27.5-year property if we're looking at a residential property, and it changes that you get to, because you're energy efficient, you get to take it in year 1. So it's a year 1 benefit. It's accelerated additional depreciation. You have to have basis in your asset in order to take it. So yeah, that's the key there. In some cases, certain lighting projects, QIP, and there's other special rules where you can just write off your improvements. So that's 179D. Wouldn't, if you wrote off the lighting property and you took it as a QIP improvement or 179 expensing or whatnot, bonus, and there's no basis there, you can't take advantage of it. So it wouldn't be valuable to you. So
real quick, QIP is changing coming up. So it's reducing 20% a year, I believe, starting in 2023. So that will offer some benefits and dollars available, especially in larger applications for 179D. 179D, even though it's a immediate accelerated depreciation year one, it is not limited like Section 179 is. 179D allows unlimited dollars in deductions.
Yeah. Another question, if I could talk more about the apprenticeship requirements for 179D. Unfortunately, until we get clarification on that, I'm gonna defer to answer that. I don't want to point you in the wrong direction. I don't want to give you the wrong answer there. So thank you for the question. I just until we get good guidance, I don't want to really walk you down to the river and make you drink if I don't know the water is clear. Are there any kickers for electrification efforts beyond the energy efficiency they deliver? I don't know if I understand that question. I might jump offline with you and answer that later. Sorry. Cancel there. All right. It's an all or none for 179D. Okay, so yes. So new question is 179D now all or nothing? It's no longer compartmentalized by the whether it's lighting, HVAC, or building envelope. That's essentially correct. Under the Inflation Reduction Act, now 179D becomes a essentially an all or nothing component. So you have to hit that 25% initial buy-in to get any amount of deduction. You can do that over multiple categories, but you're no longer it's no longer the type of incentive where we're looking just at lighting, just at building envelope, just at HVAC. Okay. So any benefits for someone on an energy efficient roof, or that does nothing? I mean, look, in certain climate zones, energy efficient roofing can be brought into the equation. In the private sector specifically, so climate zone 1, climate zone 2 on roofing, if it's a reflective roof, that may come into play. It may not move the needle enough under ASHRAE 2016. We'd have to really dig into that and see. But yeah, I mean, it's gonna come into play, especially if there's other improvements there, lighting improvements, HVAC improvements, or the building's already efficient. That could essentially be an opportunity. So yeah, that it will affect things, and it will move the needle a little bit. It just may not be on its own maybe enough to move the needle.
Yeah, it may move it more for those facilities that are single story wide, like distribution centers, warehouses, et cetera, where the roof has a much bigger impact.
Yeah. Another question says, can we retroactively apply for a deduction for a project in which the performance period of the implemented changes occur after 1/1/23 date, or do we need to apply the deduction prior to the measures being placed in service? No, I mean, those rules are going to remain the same as far as, so if I assume what you're asking is, let's say if something got placed in service in 23, can you in the future, call it in 24 and 25, go back and claim those deductions? You with 179D, you can still go back. You can still have change of counting method and go back and claim the deduction, take it in the current year. So you don't have to apply for anything prior. It can always be done after the building is placed in service. We always recommend sending over projects. We can take a look at them, do a feasibility analysis on them, and let you know if we think they're going to qualify or not. We can do that early on in the project, but it's not like an application process. You don't have to apply or submit anything to the IRS ahead of time. So,
and David, and just in case the intent of the question is a little different, I'm not sure. The standards that are revised are not typically retroactive. So a change in standards for the new program in 2023 does not affect how you look at a building placed in
Correct.
service prior to that.
Okay. Yeah. No, definitely. Absolutely. Yeah. Thank you, Steve. And like Steve said in the call, in the kind of in the middle there, we may be waiting on some of those standards, and we may still be operating under 2007 for a little time after that. So there may be a moving target there as to when we can how we do this. So is there an income threshold to take the residential credits? No, essentially there is no income threshold. I mean, if you have the tax appetite, have tax liability, and you qualify for the credit or deductions, knock yourself out. Another question, does a design build contractor need to have someone on staff with a license? I assume this is referring to the designer of energy efficient commercial building properties, and do you need to have a PE on staff or an architect or engineer or somebody on staff? And the answer there is no. Essentially, you need to be primarily responsible for the design. You don't necessarily have to have a engineering degree on staff to be able to take advantage of the 179D and have it allocated to you. That being said, the IRS got cute in one of the IDRs, and they specifically asked for the license of the person in the jurisdiction in which the building was designed. And we very quickly turned around and said, this isn't even tax law or code or bulletin or guidance or memorandum. You can't ask for that. And they dropped that point pretty quick. So so maybe there's some misconceptions around that, but no, you don't have to. Again, if you have contractual responsibility for the design, that's where you need to be to take advantage of it. And if it's a specific use case scenario, I always recommend, let's get your CPA involved. Let's get us involved. Let's look at the case together. Let's make sure all the parties are comfortable with the fact that you meet the definition of designer under the different case use scenarios of the memoranda, and then let's go from there. Lots of questions. I like this. Is it 45L applicable to a developer or homeowner? No, the 45L goes to the developer. It goes to the party who has basis at the time of construction. So, so really a homeowner wouldn't benefit from it, and specifically. So, yeah, I'll be sending out this presentation in PDF after. Thanks for the question. Yeah, I'll send out a recording after as well for my folks who were late. If you were late, you missed the American Funniest Home Video at the beginning of the thing. It was top quality stuff I was showing there. Yeah, I'll send presentation. Okay, so in 2023, how are we certifying these studies without guidance using yeah? So essentially in 2023, until we get the guidance, we're gonna have to kind of depend on existing guidance until we can comfortably feel good about what the IRS puts out. So that's kind of par for the course. It's what we've been using for the time being, and I think it's a position that could be substantiated from that point of view. So, and last question, is LED lighting upgrades for exterior commercial buildings now eligible under 179D? Unfortunately, no. Commercial 179D is specific for the interior of the building, for the overall energy usage and interior. So exterior will not come into play when it comes to 179D. And that's all the questions I got. I really appreciate everybody. I'm sorry we went a little longer than usual. List a little bit more about us, Walker Reed. I'll send this out to everybody who was on the webinar, and I'll send out the recording as well, assuming I can technologically figure out how to do so. And if anybody has any questions, feel free to give me a call. Emails here at the end. Phone number is on there as well. I'll leave that up for a second. And again, I appreciate time. Steve, thank you so much for being on the call with us and providing some insight. I'm looking forward to helping everybody out here shortly. So thanks and have a great day, everyone.